Thank you very much. Thank you, Phyllis, Tracy, Joe, and everyone else here at Pew. I'm going to talk about attracting venture capital and private equity. It's something that I've been doing for quite some time. I actually have been looking at making investments in the sector and putting capital to work for about 12 years. In total, about $2.5 billion invested in my career so far. These are some of the companies that I have worked with at Goldman Sachs, where I started renewable energy investing for the firm back in 2002, and then for the last 6 years at Hudson Clean Energy Partners. It's actually a mix of companies that are involved. We're actually a later stage investor, so we come in well after the seeds have been planted, and so we're considered late stage and growth and private equity investors. We also invest not only in energy innovation and manufacturing, we also invest in deployment. And so there's a mix of companies here. And so we get a three-dimensional view of clean technology in our investing activity, which I think makes us a little wiser about the ability of companies that are involved in manufacturing to be successful when it comes time for deployment. This is a sense from the view of a check writer of what it's like to be sitting in our seat. We've seen around 3,500 investment opportunities to date, which is quite a bit. During our peak of investing, it was about 15 deals a week. So I want to give you a sense of what it's like to be in our factory looking at the other side. So if you could just roll this tape, please. These are my partners here at Hudson, and this is them looking. So the little chocolates there are you guys. And your job is for us to pick you up. So 15 deals a week is a lot like Lucille Boyle was feeling when she was on that factory floor. So what are we looking for? We start by looking at companies that deploy great technologies. And so technology, since we're at ARPA-E today, and I would say this in any forum, even in a deployment forum, it all starts with great technology. But it doesn't end there. And we're going to talk about that in the next few minutes. I'm going to focus on that for you. Technology has to ultimately step aside for a while, and we need to focus on policy. So we were upstairs, and I was listening to John Podesta and Ernie Muniz talk about it, and it was all about policy. It wasn't really about deployment. So policy is huge, and I'm not going to talk too much about it today, but certainly you can ask me questions about that. And then comes markets. Markets is a broad term that we use to define the commercial sphere, how we actually make money. It's all about making money at the end of the day if you're a check writer like what we do, because we have to earn a good return on our investment. And so we have to get into the markets and be able to make a profit. Now, so ultimately, for us, what we try to do is understand how they all work together. You can have a great technology, but it may not be supported by a policy that's necessary. And that, by the way, could be a subsidy, or it could just be a regulatory, a rule, a law, or a regulation that stimulates flow of customers. Ultimately, what we're looking for is not us. You're looking for customers to buy your product. And so policy drives customers to your door, but it's ultimately the customers who will write the checks that make us money and make you money. Now, this is a chart that we came up with at Hudson that I think this picture definitely tells 1,000 words, so I don't have enough time to give you 1,000 words on this slide. But it gives you a sense of the funding stages of companies that go through a life cycle and what are they doing during those stages. So it starts off with the very early stage investors, often called angels, and then we look through the venture capital phases, the angel investors who officially come in there. The crazy ones are all the way over the left, who are just basically throwing darts at a board blind. But as you move forward, what we're trying to do is aim our bets a little bit more precisely so that we can measure our risk and generate a return. And if you notice on the top, the expected returns go down. Now, this is not scientific. Others may come up with higher numbers or lower numbers, but it's pretty close to where the market is. And that green line is cash in the company. So as you become more successful, cash becomes more of a critical issue. The cash flow is getting worse and worse and worse until the day that you turn it all around and you succeed. So this is why I'm actually only 25 years old. That's why I have the gray hair, is I worry about this, because that's where I live. I live in the Valley of Death. That's my summer address. So how are you going to make people like us happy? It's really simple. You just have to create a company that I can sell someday for $1 billion or more. And then it's all hunky-dory. The problem with that is I've been doing some research, and actually one of my associates came up with a number of 11 clean tech companies in the past 5 years have been sold for over $1 billion. I've actually been checking her work. She's an outstanding associate, but I think that the data source was a little corrupted. There are more like 2 or 3 companies over the last 5 years that have been sold for over $1 billion. It happens to be one of our portfolio companies was one of those, but we were looking for some others, and it was very hard to find. There have been more IPOs, but over the last 2 years, the IPO market has been virtually closed. And so getting into it is nice and easy. Getting out of the relationship is really hard, and that's the hard work that we have to do. So if you want to make your investors happy, you have to create $1 billion company if you're going through the Valley of Death. Now, many of you will have companies that don't need to go through the Valley of Death, that very difficult process of scaling up technologies for commercial deployment that typically cost investors hundreds of millions of dollars in capital. So if you want to make everyone's dream come true, you will have to get in aggregate somewhere between a 3 and 4x investment on all forms of capital. And what we did here is just said on the top end of expectations, how much capital, how much needs to be returned to each class. Now this would be a perfect scenario. I do not know of one company who's actually successfully returned capital of that amount to every investor. Typically, some of the early investors, when big capital flows, get crushed. And we don't like doing that because we were worried about the next guy crushing us. But this is what it takes. This is not easy. And so with so much challenge, what does it feel like for you? And this is just a little representation of what it feels like.
There's 24 of us, Cal, only one comes out.
It's got to be you.
So, as I was thinking about it, coming down here to talk to you all, I thought 1 in 24 might be a little aggressive. Maybe it's not that bad, but to actually get the gold at the end of the rainbow, it's probably worse than 1 in 24. And so that's very sobering. So what does it actually take? Why is it so hard? We don't want to take 1 in 24 bets here. When we come in at a later stage, we try to improve the odds dramatically so that we can invest more capital at lower risk. But that's what it takes, and that's what it feels like being at the beginning of the race. So what does it take to win? So this is my slide where I just try to put it all together for you and give you my sort of 7 keys to successful company building in the clean tech space. So the first is it needs a great idea, and that could be an innovation in technology or actually in business model. But it takes more than that. It takes persistence. You ultimately need to build strong teams. By the time we start looking at companies, those teams have been built, and what we do is try to run with those teams and then refine those teams, add to them, subtract from them, etc. But if you don't have a good team on your side, you're just not going to win. You have a great idea. Without a good team, you're not going to win. And to get that team, you need persistence, because you don't always get it right. And you have to hire people, hire more people, and ultimately fire more people, and that's the way it works. You need to have good timing. So the last couple of years have been very, very difficult, as many of you know, for the clean tech sector, but the tide is turning. So when I started investing in 2002, 2003, 2004, I didn't know how good my timing was. It was extraordinary. You don't know how good it is. It often happens that you have a pit in your stomach when you're actually making these investments, and the time that is the worst time to invest is when everyone is high-fiving you. So timing is critical, and that takes persistence too. The next is you need to know your market. So if you're an entrepreneur and you're focused on technology, that's great. But if you don't know your market, if you don't know who your customers are and how much they're willing to pay for your product, you're not going to be successful. You're going to be the 23 out of the 24. You need to connect with your customers ultimately. And those customers are very fidgety, so you really need to be persistent about identifying customers even when they move from product to product, which has happened in our sector pretty dramatically. You also need to know yourself, your limitations. Everyone has limitations. Entrepreneurs are very stubborn, and so persistence, there's a synonym is being stubborn, but you ultimately have to know when to let go. And so you need to know your own limitations. But you also need to be persistent. I'll end with a little anecdote about that in a second. You need to know the rules. What I mean by the rules is you need to know the laws, the regulations, those ways that you can generate more value out of your technology and your product than just continue to pour money into it until, eureka, you've got your product at the right cost point and you can generate it. So you really need to know the rules. If you play the rules of the game well, you can capture value through regulatory arbitrage, which is a big part of what we do here at Hudson. And then lastly, you need to know the math. So I've given you a real simple illustration of the math, but it's quite amazing. So my specialty is finance, it's not technology. The math is hard. It's always changing because we're in an incredibly competitive environment in which you may think that the cost structure of your technology is a game changer. You don't know the 25 companies, or maybe the 250 companies, or maybe even the 2,500 companies that are in China. For example, this gentleman is involved in the LED space. I went to one province in China where there were 2,500 LED companies. So there are companies that are trying to eat your lunch, and you don't know who they are. You need to understand the energy math, the math of how you make money. And so, and if you don't get it right, by the way, try and try again. One of my biggest success story in investing was with First Solar, about a 14, 15 times X multiple. I got very lucky, but the CEO, when I sat down with Mike Ahern, he knew the math. He showed me in a 20 megabyte file where he was in 2005 and where he was going to be in 2010. He knew every inch of that financial model, and that was the telling moment when I decided to make the investment in Mike. You need to know the math, and if you don't know the math, make sure someone on your team knows the math, because the folks like me and my colleagues over here from Black Coral, they know the math and they will expose it. So the better you know the math, the better you can be, and again, you need to be persistent. So ultimately, what's the bottom line of all of this here? You need to be persistent. So the fact is that no matter what I tell you here, unfortunately, most companies that go through the clean energy life cycle will end up failing. The paradox is that the ones that will succeed are the most persistent. However, most of the most persistent ones will also fail. So that's a fact of life. I cannot solve that paradox for you, but that's why you're all here, because you're determined to succeed. So it's only through persistence that you're going to get to that finish line, and you have to keep on trying and don't give up hope. So that's what I have for you today. Thank you.
I'm Nikhil Garg with Black Coral Capital. First off, I'd like to thank Pew for inviting me to speak here today. Just real quickly about my firm. We are early growth stage investors across energy, resources, materials markets. We will invest in a range of companies across generation to efficiency, transportation and fuels, water, land use, agriculture, so on and so forth. Pretty broad perspective on the market, and I'd like to talk to you today about. Pew asked me to speak a little bit about what venture capital investors are looking for and how you can go about finding funding. So, in terms of that, rather than going through the laundry list of things that an investor might typically look for in a pitch deck or an approach from a startup company, I thought I'd talk about an issue that's near and dear to our heart, and that's around the issue of business model. And all too often I see companies that have very interesting technologies, but not nearly enough attention or planning around the business model side, which ultimately is going to be a huge determinant of whether they're able to build a successful business ultimately. So, with that, I mean, one key point I'd like to make is that business models are critical in these markets, because you're not talking about substitution in most cases in terms of the products and services that you're offering. Many times you are really looking at reinventing how these products and services are consumed by the end customer, how they are satisfying their ultimate end needs for whatever product you're bringing. And so those examples abound across different markets. If you think about distributed generation and how customers are purchasing power, biofuels sectors where you're reinventing the supply chains for liquid fuels, demand side management, you're reinventing how the grid is balanced by the utilities or system operators. All those are very different paradigms from how business is done today, and with that brings a lot of other changes that are required along the way. So, you know, as a result of that, you know, what I'd say is that you see you see in these markets that customers are not just looking for technologies, rather they're looking for solutions. You know, these needs are often mission critical to whatever they're engaging in, whether it's a consumer or a commercial or government end customer. These energy and resources are critical to what they're doing day to day, and they're going to want to have the confidence that they can reliably and smoothly source that from the prospective companies that are all here today. So, you know, with that, I guess, what distinguishes a technology from a solution? And what I would say is that really, apologies that this is a little small here, but you know, we see the downstream elements of all these industries really being that critical enabler. Here, you know, some of the key ones that they'll identify you know, include things like integration or distribution channels, value-added resellers, financing, servicing, you know, intelligence to layer on it. And there's many others, and you know, these downstream needs vary significantly by end market. So take these as just one example here. I mean, to put a fine point on it, perhaps I'll use an example that I like to share. If you think about the automotive industry for a moment and think of cars as your technology. Now, if you didn't have dealerships and repair shops and gasoline stations and automotive financing and so on and so forth, no one would actually buy a car because they would be pretty useless. And so that's thinking, you know, that's the sort of thinking that we're looking for in terms of companies really understanding what the holistic end needs of their customers are going to be and planning ahead for those. So, you know, with that, I guess I'll end on one last point here in terms of what is that common theme that we see in the companies that are consistently successful in delivering on these this holistic customer solution. And you know, no surprise, and it syncs with some of Neil's comments, it's around the management teams. We find the strength of the management teams, really top teams, and I'll specify teams, not individuals, because I think we rarely come across the individual entrepreneur that has that end-to-end capability set. Rather, it's about understanding where those strengths and weaknesses are across your team, how the pieces fit together, how you're not just addressing technology, but the actual operations and customer-facing aspects of the company. And lastly, you know, where there are gaps, how you plan to address them over time. And we see those companies with that sort of foresight really being the ones that are ultimately able to succeed with this challenge. So with that, I'll stop there, and thanks for your attention and happy to take questions.